In the Kickstart video for January 23rd, 2025, I take a look at three of the major currency pairs: the euro versus US dollar, dollar versus yen, sterling versus US dollar from a technical perspective. There's little volatility in trading here today with up and down volatility. The euro versus US dollar only has a 30 pip trading range. The dollar versus yen only a 56 pip trading range, while the pound sterling only has a 38 pip trading range. This is well below the 1 month average for these currency pairs. So there's room to roam. We'll see what levels are in play and where they may roam. So let's get started. Looking at the euro versus US dollar on the hourly chart, the high price that we saw in yesterday's trade came right up to the 61.8% retracement of this move to the downside from the December high to the January low. That 61.8 came in at 1.0456, and you can see the high price was just right at that level right there. It also was within this swing area here, defined by a number of different swing lows here and then swing highs through here. That combination of floor and ceiling right here was enough to stall the pair. As well, that swing area comes between 1.0448 and 1.0461. The price moved lower as a result and closed the day and started the day near the 50% midpoint of this move to the downside right here. That level comes in at 1.04028. Also in play is the 50% midpoint of the the range from the 2022 low. That's this low right here. To the 2023 high. The 50% retracement off the daily chart comes in at 1.04053. So that level right there, combined with the hourly 50% retracement at just 3 pips below that level, what is a key barometer for bullish above, bearish below. And as you can see in trading here today, the market is undecided which way it wants to go. Does it want to go higher or lower? Want higher or lower? That's what's been happening. The price has been waffling above and below that 50% retracement level all day long. So what we are currently below that level, and as long as we can stay below the level, the bias remains more to the downside. On the downside, we have the 100-hour moving average. We have the broken 38.2% retracement, the rising 200-hour moving averages targets, and also this swing area down here, which held the low in trading on Tuesday, which is interesting as well. So those are the targets for downside. If we move back above it and we stay above it, we start to create more momentum, and we start to look toward the targets on the top side, including this level right here near the 1.0436, and then we start to look toward the swing area up here in the 61.8% retracement, get above those levels, and things would be more bullish for this pair. So buyers and sellers battling it out right around the 50% retracement levels off the hourly and daily charts. Let's take a look at the dollar versus yen next, and this trading range only 56 pips. The average over the last 22 trading days, which is a month, is about 117, so less than half of what is normal. We see the low price in trading here today. Find support buyers near the high of this swing area. This swing area is defined by a number of different swing lows coming through here, forming this floor right through here. We've got a little messy right here, but then started to use this level as resistance right here before moving up in trading yesterday and above that level, and we stayed above that level, including at the low price today. So the buyers are making a play in the dollar versus yen ahead of the Bank of Japan interest rate decision. They're supposed to raise rates by 25 basis points, which what they hope may strengthen the yen, push the dollar versus yen to the downside, but it always takes two to tango in the currency pair. So, with dollar strength today, with the yields moving higher and stuff like that, maybe keeping this pair more to the upside. Nevertheless, if the price is going to go lower, we do need to get below this swing area right here and also below the 100-hour moving average at 155.95. If we do that, then the pressure should be on this pair for further downside momentum with a 38.2% retracement in this swing area right through here as the next key target. In trading on Tuesday, the price found support buyers against the low of it and moved back to the upside. So this area right through here is a key target on the downside for the dollar versus yen, not only today but going forward through that rate decision. On the top side, if we stay above this 200-hour moving average, the bias is a little bit more to the upside, and we'll see if the price can continue its run higher. Getting above the high prices from yesterday and today would be a goal number one, and then we start to look toward maybe the levels like this around the 157 level. Get above the 157 level opens the door for potentially move up toward other consolidation levels up through here, including this swing area between 157.91 and 158.09. Finally, let's take a look at the sterling versus US dollar. And this currency pair also has a very narrow trading range, well below its 1 month average. And the high price of trading here today did stall against the 100 bar moving average on the 4-hour chart. It tried to do it here and here. We moved above it in trading yesterday, rising to the 38.2% retracement of this longer move to the downside in the process. That's this level right here. I'll get all these arrows out of the way to show you right here. That's this 38.2 of this longer term move to the downside. Since then, the price had moved lower into the close and below the 100 bar moving average. We also moved below the 50% retracement of the January trading range, or the 2025 trading range. That level comes in at 1.2337. That's this level right here. And we're also below, so staying below both the 100 bar moving average and the 50% retracement keeps the bias more to the downside. On the downside, we have a combination of the 100-hour moving average and the 38.2% retracement at near the 1.22808 to get below. If we get below those levels, it opens the door for further selling, in which case we'll look toward the 200-hour moving average and move below that. Opens the door for further downside momentum. So there you go. Look at 3 of the major currency pairs and the biases, the technical levels in play. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.